All right, guys, we have some earnings to cover in this video. We have three in particular: Lululemon, Costco, and Broadcom. All of them just came out literally like 5-10 minutes ago. So we have to go over those, see how the stocks are reacting, and of course, guys, we're gonna break down the indices, other stocks I'm watching as well, which, by the way, guys, the S&P just hit an all-time high. SPY hit over 690, and I don't think QQQ, well, in fact, I know QQQ's not there yet, but we are moving in the right direction. QQQ's breaking through 627 after the bell here, and we're going to break down why. So guys, hit the like button, subscribe, join the Patreon for my portfolio updates. We post those week in, week out. There's a private Discord as well, link down below, also pinned in the comments, and let's get into it. So like I said, SPY hit all-time highs, QQQ's popping in the aftermarket. What is going on? Let's start off here with AVGO, Broadcom. Their earnings just came out, and guys, we're popping after the bell. The stock closed at 406, right? Down 1.6%. And we were in desperate need, especially the AI trade, right, for a move like this. We got heavily disappointed by Oracle yesterday. They increased their CapEx for, the following or the next year by $15 billion. That kind of freaked everybody out in Oracle. The stock tanked. So we were in desperate need of something like this. And we got it from Broadcom, AVGO, which I don't personally own, right? But this is lifting other AI stocks that I do own, obviously, right, guys? Kind of how it works a little bit here. So AVGO is popping now over 3% after the bell. We were up 4% at one point. So let me see here what they reported. These earnings are fresh off the press here, guys. They did adjusted EPS of $1.95 versus $1.86 expected. That beat. Sales also beat 18.01 billion versus 17.49 billion expected. So double beat out of AVGO. And oh yeah, the guidance. There we go, baby. They see Q1 sales between or at $19.1 billion versus the $18.26 billion expected. So their guidance, guys, is pretty much a whole $1 billion over the estimate for revenue for Q1. Very good there. And it looks like they raised their dividend from 59 cents to 65 cents. That's actually a big pop there, guys. About a 10% dividend raise. Very nice. 6-cent raise there, which, I mean, hey, I'm not a big dividend investor. It's like the cherry on top, right? But hey, why not? If you're in the stock, why not collect the dividend, right? So that's pretty good there. Let's see, anything else? Really, it's that guidance, man. Very good guidance. And we noticed that out of NVIDIA, right? And the market sold the crap out of NVIDIA stock after. So it's good to see that they're not doing that here on Broadcom after Broadcom raised their guidance, So that's a good sign, I love it. I love it. And let's see quickly here how NVIDIA is doing. Yeah, we're up about 50 cents after the bell, so we're up about 0.4%, not much at all, but we'll see how tomorrow goes next week as the market stabilizes a little bit after a pretty tumultuous week. I mean, look, we had the Fed decision, we had a bunch of companies, big companies reporting earnings, Oracle, Broadcom, Costco. So I think next week we'll cool off a little bit and we'll get some more direction in the market, especially in these AI names, which a lot of them are just still waiting to make a move, especially here on NVIDIA, guys. We tried breaking out, right? But we're still clearly in this wedge. So what direction are we going to pick? Obviously, Broadcom, going back to this, is breaking out. It actually hit an all-time high. Will NVIDIA follow? We'll see. We'll see. So I like that. Broadcom's looking great. Again, I don't own it, but kudos to you if you do own the stock. Very good news here for the AI trade. The fact that Broadcom double beat and they raised their guidance. Very similar to what NVIDIA did. I love to see that. So let's go over to Lulu, which this one is going nuts, guys. We're up $15 after the bell, which Lulu, heading into the report, was down 45-50% year to date, and it's one of the worst performing stocks. I mean, it still is in the S&P 500, but it's really starting to make a move off the lows here. We hit $160 back in the middle of November. Now we're pushing, over 200 slightly, 25% in the green. So Lulu reported earnings per share adjusted, or actually no, not adjusted, EPS of $2.59 versus $2.27 expected on sales of $2.56 billion, which also beat the $2.48 estimate. So double beat for Lulu. Looks like they see full year revenue of 10.96 to 11.05 billion. Pretty good here. They raised their full year 25 GAAP EPS guidance. That's good news. And they raised their sales guidance, which is also good. And this stock, I mean, it's been chewed up and spit out for months. We all know that, with the fears from China, the fears regarding, tariffs. Those are legitimate fears, but maybe it's overblown. And at this point, people might, I think they're already doing it, rotate into this stock. And we were talking about this a week or two ago. They might rotate into this in 2026. A lot of these tech stocks, not saying they're going to crash, but we're already seeing a little bit of money coming out of them. That money might be going into names like Lululemon, into names like Adobe. We're already seeing that. Adobe starting to come up again. Into names like a CRM, which I'm not the biggest fan of, but these are beaten up stocks, and they might be seeing an influx of buying pressure if we get it. I mean, it's starting, but if we get more of that rotation into these beaten up names, and I think Lulu is one of them that, I mean, hey, we called it out, right? We called it out a couple weeks ago. It's one of those that I think might have legs, especially if we break through, 210, 225. So this one is up now after aftermarket. Let's see, about 10%. So we're ripping 10% after the bell. Gotta love it, man, especially in a beaten up name like Lululemon. So keep it on the watch list. It's up a good chunk, again, 10%, but you never know. These gains could be given back tomorrow. It's still in a downtrend overall. Don't get too excited yet, although it is. I mean, hey, if you're in short-term call options or you bought short-term shares to kind of play this trade or this earnings play, right? Kudos to you. But don't be shy. Take profits, be careful. You never know what's going to happen with this. But that's Lululemon. Costco is another one. COST, they reported earnings. Let's see, the stock ended up going up a little bit initially. Yeah, up a little bit. Now we're pretty much at break even. We dumped down to 870 actually too. So we've been all over the place. Costco ended up reporting, let's see, earnings per share $4.50 versus $4.27 expected on sales of $67.3 billion versus $67.13 billion. So double beat for Costco. And anything else really? Not much here. Same store sales up 6.4%. Year over year. Looks like Q1 membership fees revenue $1.33 billion. And that's the lever that I think Costco can pull in the future. I mean, they're already doing it, but increasing their membership, I still think it's cheap. I'm paying whatever it is now, 120, 130, 40, whatever it is for the executive membership, right? I'm paying that, and I still think it's cheap. I think they have this lever that they can really pull and make it like $250. I mean, I would still pay that. If Costco's fee was $250, I would still pay it. Now, if it was like $1,000, all right, now it's getting ridiculous, but we're nowhere near that. It's $100 whatever dollars right now, and I think they could increase that into the future. They have that pricing power. So, yeah, I think Costco is a great business. I mean, look, we've covered this before. I just think they always trade way too expensive. Even now, with the stock down like $200 from all-time highs, I still think it's not the best deal. The valuation is not too nice, or not nice, but too attractive, and if it gets down under, let's say, $800 to $700, maybe $750, it could be a different story. But for now, guys, I'm just watching Costco. And quite frankly, I want to see it go under 800. I want to see it get hit even more. So I'm rooting for it to go down. I'm sorry if you're in Costco, guys. I'm rooting for it to go down. So that's a quick breakdown on that one. Let's see some other movers today, guys. What ended up doing well? We got some news out of Rivian that they're actually using their, I'm pretty sure their own chips now instead of NVIDIA's to fuel their self-driving, initiatives, which, hey, that might not be the best move. It might be the best move. I don't know. I haven't really looked too much into Rivian, what they've been doing lately, although we have covered the stock on the charts, which is different. We're breaking down charts all the time. I don't always dive into the fundamentals of the stocks that I'm breaking charts down for, but if I'm buying a stock long term, of course we're looking at fundamentals, but really I haven't even considered buying Rivian long term. Maybe though, after this dip, maybe there's something to what they're doing here. We'll see. Bringing things in-house, right? So Rivian's an interesting one. It's down a good chunk today. It went down 6%. It's right around the 180 SMA now on the 4-hour chart. Maybe we end up getting a rebound there. We shall see, guys. What else? Netflix, of course, we've covered. That one's now in the low mid. What is it? 90s? Yeah, 90s. It hit 94 today, closed at 94. I think we got down to 92 something yesterday, and they're trading at 29 times forward earnings. Not a screaming deal by any means, not even a deal, but it's slowly getting there. If Netflix can get down to $80 a share, I've said it, I think it's going to be a great deal, especially in the 70s, right? But come on, is it going to get there? Probably not. Let's keep it real. But I'm not going to buy it yet, guys. I'm not too eager for another tech stock in my portfolio at this point. I'm just not. But if the valuation gets to a point where it'd be stupid not to buy it, I'd buy it. But we're nowhere near that. And we'll see, man, with this Paramount deal, or not the Warner Brothers deal, Paramount now coming in, it's a mess. I don't know if I want to be a part of this right now. We'll see, though. We'll see. And with that being said, guys, I might as well wrap it up. I don't want to yap too much. Hit the like button. Make sure to subscribe. Check out the Patreon if you're interested in my portfolio updates. We're investing $1,000 a week right now. And you guys see all the moves I'm making, investments, trades, right? You get Discord access. It's all linked down below. Of course, it's pinned in the comments as well. Or go to stasurfs.com/Patreon. And with that being said, I'll see you guys in the next video.